Welcome to another S&P 500 analysis. Today is April 9, 2022. The S&P 500 made a relatively strong and quick recovery from its February low, but in the last few weeks it appears to have stalled, and the recent price action could be setting up for a strong pullback, especially with some important economic reports coming out next week. We will get the latest inflation number on Tuesday and the producer price index on Wednesday. If we see some surprise from these numbers, watch out. In this video, we'll look at the market internals and the market sentiment and analyze the price action of the S&P 500 along with other major market indexes to see what they are telling us. In addition, we'll also look at the relative strength on some key sectors to see where the market participants are putting their money. And we'll also look at the precious metal market, the oil and the US dollar, and couple of the FANG stocks such as Apple and Tesla, and also follow up on some of the home building stock that we've been watching for the last week or so. So stay tuned. Before I begin, I need you to take a moment and click the thumbs up to help me promote this video on YouTube. Now let's start with this weekly chart of the S&P 500. The S&P 500 lost 57 points or 1.27% for the week. It had a range of 143 points. The weekly price action had ended this one-time framing up and started a one-time framing down. It closed the week below this 40-week moving average, but still above this 10-week moving average, and the price closed beneath this price channel. One important thing to note on this S&P 500 weekly chart is this evening star pattern. This is a bearish pattern that can lead to price reversal. We'll look at this in a more detail later in this video. Let's take a look at the sentiment chart. Now, if you are unfamiliar with the market sentiment and the market internal that I'm about to review, then go watch my video on 7 key market indicators, where I explain what each one of these indicators represent. I have also posted the link in the description below. And if you are interested in monitoring what the market is telling you and to get an unbiased view on the market, then click to subscribe to this channel. Now, as you can see from this sentiment chart, we see the VIX been continue to stay inside of this 20-30 zone. So the market participants are still showing a level of fear. And last week, the put-call ratio has been in the range between 0.6 and 0.8. This indicates the market participants are not totally risk-on, and neither were they totally bearish. It appears they are doing some hedging. Now looking at the market internal, as you can see on the up-down volume ratio on Monday, we saw close to 2-to-1 in favor of the up volume while the S&P 500 was up. But then on Thursday, with the S&P 500 having a positive day, the up-down volume ratio was 1.5-to-1 in favor of the down volume. So there's kind of a little bit of a mixed bag. And on Friday, we saw 1.35-to-1 in favor of the up volume, while the S&P 500 lost 11 points. But then looking at the AD, the daily advanced decline, we see a couple of days of broad market participation on the downside. Like Tuesday, there was over 2,000 more decliner than advancer. And also on Wednesday, there were close to 1,500 more decliner than advancers. So definitely the market participation is not that strong even on the up days. Like on Thursday, we actually saw more declining issue than advancing issue, while the S&P 500 was showing a positive for that day. And on Monday, when we had that rally, there's only 314 more advancing issue than declining issues. So again, it's not a broad market participation on the upside. And looking at the New York Stock Exchange new high, new low, the new 52-week low still dominate the new 52-week high. And even though on a up day, like on Monday, there was only 55 more new 52-week high than 52-week low. And then on Tuesday, there was actually 3 more new 52-week high than 52-week low. Then when we get to the Wednesday, Thursday, and Friday, we're looking at a couple hundred more new low than new high. So again, the weakness comes in when we see the index moving down. And looking at the cumulative AD line on the New York Stock Exchange comparing to the S&P 500, we're essentially still waiting for this negative divergence to get resolved. Now, looking at the Nasdaq market internal, we see that the up-down volume ratio was also pretty negative on a down day. Like here on Tuesday, it's almost 4-1 in favor of the down volume. And on Monday, when we saw a rally on the Nasdaq 100, the up-down volume ratio only 2.8 to 1 in favor of the up volume, and the down day we're seeing 3-1, 4-1. In addition to that, the daily advanced decline was also pretty broad-based on a down day. Like on Tuesday, we saw over 2,300 more declining issue than advancing issue, and also on Wednesday we saw over 2,000 more declining issue than advancing issue. And even on Thursday, when the Nasdaq 100 was actually positive, we saw over 800 more declining issue than advancing issue. And on Monday, when we saw the Nasdaq 100 actually rally up, there's only 1,200 more advancing issue than declining issue. So as you can see, on the negative day, there are more broader market participation on the downside than on a positive day. So that is not good for the Nasdaq market. That indicates lack of strength on the upside. And for the Nasdaq new high, new low, as you can see, the new low is still overwhelmed the new high, even on an up day. Like on Monday, there was actually -1, one more new 52-week low than 52-week high. And throughout the week, we saw like on Tuesday 81, and then on Wednesday 257, Thursday 201, and on Friday 187. More new 52-week low than 52-week high. And for the cumulative AD line on the Nasdaq market, we see it coming down along with the Nasdaq 100 index. The market sentiment is telling us that the market participants are indecisive on the direction of the market right now. They are neither bullish or bearish, but they are being cautious and appear to be putting on hedges. And the market internals are telling us the market is still relatively weak. There are more broader participation on the downside than on the upside. New lows still outnumber the new high. All right, let's take a look at the price action of the indexes, starting with the S&P 500. This week, I'm not going to look at the daily chart. I want to focus on the weekly chart specifically because I want to talk about this, this pattern here, this evening star pattern. Right, that normally indicating some bearish price action. The probability is that we'll typically see the price to come down. Now, there are confluence here, as you know, that we got this trend line here, and also in addition to that, we have this Fibonacci retracement on the swing here, and you see the price kind of start out at this 618. Right now, it's kind of pulling back from the 618. They try to come up and push away from the 618 and try to make its way up toward this all-time high. But you could see that it was actually finished up the previous week with some sort of a doji type of candle. And now this week we are finishing up with a bearish candle. So this formation here, this candle pattern, is what we call evening star. And right now it is pulling back from the 618. And that 618 is typically one of the, Fibonacci reversal level. Okay, so we see that it's pulling back from the 618, and although we did see a little bit bounce off the 50% level, so for next week, if we see price kick out last week's low, then we could easily see this price action possibly come down and test this 38.2 somewhere near this 43.83 level, and if break below that, then there's a good possibility we could see the price retrace back down to this 41.14 area in the near term. So again, remember there's a CPI, that's the inflation number, and then the PPI, the producer price index number coming out next week, Tuesday and Wednesday respectively. So pay attention to those economic reports. Those numbers will move this market. So if there is some pleasant surprise, which I doubt, then it will break this trend line, then take out this high, then we could easily see this thing moving back up. Take out this 4,700 and move back up to try to put in a new all-time high. But to me, that probability is relatively low at this point in time. I'm not saying that it's impossible. It's just the probability of it to make that type of a price move doubtful from the internals and also the sentiment. But those are the things to keep an eye on for the coming week for the S&P 500. And looking at the Nasdaq 100, again, we just want to focus on the weekly price action. And you can also notice that it's a similar type of pattern as we saw on the S&P 500, this evening star type of candle pattern. And also it came up to this 618, and then it got rejected back down. On the Nasdaq 100, actually went to the 50% and broke the 38.2 retracement level. So I wouldn't be surprised to see the Nasdaq 100 continue to move down in the coming week to toward this 13,026 level and try to test the March low here on the Nasdaq 100. We'll see what it come down next week toward this 13,000 level, because right now it seems like it is breaking out or breaking down from this retracement zone here on this Fibonacci retracement based on this swing here. If there's something pleasantly surprise the market and pushes to the upside, then we could see that this thing might be coming back up to the 16,000 level. And if we could take out that 16,000 level, then we could be looking at these high being putting back in play. And for the Russell 2000 on this weekly chart, you can see that the Russell 2000 was unable to get back into this zone here. You see that it got rejected the prior week, and last week it was pretty bearish for the Russell 2000. And right now, basically watching to see will the Russell 2000 actually come down to this 1935 level and break this little consolidation area and work itself back down to this 1750 to 1725 area. And by the way, the Russell 2000 is getting back close to the bear market territory. So far, it is somewhere around 19% below its high. Dow Jones Transportation had a rough last 2 weeks. You can see this is a engulfing candle outside bar. It's a bearish outside bar, and it came down. And then last week also have a follow to a strong bearish follow to on the downside. You can see that came up, got rejected at the 618, and then pushed below the broke below the 38.2. Then we got this follow to, and right now it's getting close to this 100% retracement of the swing down at this 14,133. So keep an eye on the Dow Jones Transportation to see what to take out this low here. And what this will lead is that it will tell us to expect the Dow Jones Industrial to make a lower low. And by the way, on Friday's close on the Dow Jones Transportation, it has entered into bear market territory because it basically had lost a little bit more than 20% from its all-time high. And here looking at the Dow Jones Industrial, as you can see, the Dow Jones Industrial doesn't look as bad as the other indexes that we have looked at so far. Right? But right now, we're still looking at this 618 retracement level getting rejected. And it's although it's sitting somewhere around this 50%, look for a breakdown from this 38.2%. If it go below 34,000, then we could see the Dow Jones Industrial will try to come down and possibly test this low here to match up with the Dow Jones Transportation. So the key is to see will the Dow Jones Transportation make a new corrective low. If we see that it will make a corrective low, then watch for the Dow Jones Industrial to eventually have to make that confirmed low along with the transportation. And finally, looking at the New York Stock Exchange Composite Index, you could also notice we put in a sort of an evening star type of pattern as well. but more importantly, it is still inside of this consolidation or balance area. So we will continue to watch for the New York Stock Exchange Composite Index to see what it works its way back down to this 16,094 area. Now, looking at this 10-year yield here, as you can see that it has exceeded this 100% major move off of this small cup and handle. So what I'm going to do is I'm going to remove this major move here, and we're just going to focus on this larger cup and handle here. This right here, and with a major move of 100%, it indicates that the 10-year yield could go up to that 3%. One of the Fed had, been talking about getting up to 3.5% by year end. So this 3% is not a reasonable expectation here based on this major move. Right now, it's getting up to close to this 2.75%. So we're going to keep an eye on this to see would it get up to this 3% and essentially forces the Fed to accelerate their interest rate hike and get to that 2.5% by year end. And looking at the US dollar, as you can see, the US dollar might have putting a little bit of a short-term top. So we might see a little chop here. The dollar, been up 7 consecutive days. So we could see a little bit of a pullback and possibly come back into this area here, somewhere around this, 99.5 or so. Okay, I'd be surprised to see it come down to this 98.8 because I think it's still be bouncing inside of the zone, and we're still looking at the US dollar to come up to this 101 level. And looking at crude oil, we see the crude oil came down, pulled back from this high here, somewhere up at this 130. And right now we're seeing a little bit of a bounce from this 50% retracement at this 93.80 level. So although we finished with a little bit of a spinning top type of a doji candle last week. So we'll see what continue to push up and get back above this 38.2 at 102 and push back up toward this 130 level. And I wouldn't be surprised that we'll see this 150 eventually get tagged before the oil top out. And looking at the silver market here, the silver actually doing quite well, although we saw a pullback to the 618, and right now we seem to see a bouncing back toward this 50% level. So keep an eye on this 2540. If it could get up above this 38.2, then look for this thing to move up. And again, I'm still basically looking at this 2950 as a primary target for silver to come up and tag, this level here. Then we be looking at somewhere around above this 30 level. But right now, I'm just kind of focusing on this 2950. Keep an eye on silver. I think, silver still have a way to go, and it's basically bouncing off this trend line and also this retracement zone. And looking at gold, you see gold came down to the 618 also at 1894.50. Got a nice bounce, and right now it's getting back above this 50% retracement above this 1929.70. So watch this 1964 or 1965 level at the 38.2 retracement. So if you could break above this, then look for the move up toward this high here at this 2078. And I wouldn't be surprised that it will come up and try to test this 2113. So the key thing to watch next week is 1965. Now looking at the ETF for the S&P 500, the SPY, you can see right now we're essentially looking at this look above and fail type of a move. And also this 618, essentially pulling back from the 618, and right now is hovering around this 50% level. And you see that the composite point of control is somewhere around this 450 area, and right now it's booked below that. So if it continues to move back down, then we're essentially looking for the next high volume node is up here somewhere around this 439, and also in confluence with this 38.2 retracement level. So we're basically looking for this thing to continue to move down toward the lower boundary of this value area here. Okay, so we're essentially looking at this 439 and then 432, another high volume node here for potential little bit of a support area. So we're going to continue to watch the SPY to pull back, as we notice on the S&P 500 when we're talking about the weekly chart, with the evening star type of pattern. So on this 4-hour chart of the SPY, that we could see that is, some of the level to keep an eye on is basically the, 439, 432 and a half. And eventually it will come down to watch at this 424 level here. Okay, that's the composite value area low. So we, again, we're basically looking at this, right, look above and fail. And we're basically the, it already tagged this point of control. So right now we're basically just looking for the continuation move down toward this value area low. Now, if you don't quite understand the look above and fail type of setup, I also have put out another video on the volume profile trading strategy, which I talk about, this setup here. So I also have a link in the description below if you want to learn a little bit more about these trading strategy using the volume profile. And for the Nasdaq 100 ETF, the QQQ, as you can see, we also have a composite point of control down here at 347. You see that they have broken down from this 38.2 retracement at this 350.73 level. So right now, we're basically looking to see, we'll come down and tag this 347 and work its way down to this value area low near the 334.47. Essentially, we're looking for this retracement, this value area retracement all the way down to the other end. And for the Russell 2000 ETF, the IWM, you see that right now it is getting close to this value area low at 194.71. It is, kind of chopping around at this composite point of control right now. You see that it went above, look above, and then fell. So we're essentially looking at a retracement down to this 194.71 and possibly break that and work its way down to this 192 and then possibly down here at 107.90 or the 108 level. Now let's take a look at a couple of these FANG stock. First is Apple. Remember Apple, we're talking about, Apple will have a lot of influence on the direction of the S&P 500. As you can see, it also stalled out up at this level here, and right now it's on a retracement path. And we're possibly looking at this 50% retracement somewhere down at 165 level if you're going to come down there. Because right now it's also putting in a look above and fail type of a move. It came back into this value area here on this composite volume profile. So we're essentially looking at this next move here to this high volume node at 168.64. So see you probably chop around a little bit and then move down to this 50% retracement at near the 165 and possibly get down to this 618 somewhere around 161. So those are the levels to keep an eye on for the coming week because we also got a trend line coming up here. So if we break this value area, then we could look at possibly at $160 level. Essentially, it is near this composite value area here. So we're looking at Apple to continue to move down if the S&P 500 is going to be pulling back, and Apple will help hold it back. And the other FANG stock that we've been looking at is Tesla. And you can see Tesla came up to this trend line, found resistant, and it got rejected from this trend line here. So right now it's pulling back, and we're basically looking at the possibility of coming back down to somewhere around this 926 level. And that's basically will be a 50% retracement of this swing here, the swing up. So we're basically looking for this thing to pull back to 926. And if it does, then essentially we are also looking at the possibility for this thing to chop for this lower level here at this composite value area. And that will bring it back down to this 775 area that we'll be keeping an eye on. Now, I'm not saying that it's going to do that in 1 week, but those are some of the level that we'll keep an eye on if it decides to come back into this value area here. Want to get into this 50% retracement at 926. Now let's take a look at the home builder. The first one is the null. As you can see, we basically was looking at this, a little bit of a bear flag here, and we did a major move, and that will project it down here to this 6172 on a 100% major move, and the 80% will be at this 6781, and that's in confluence with this low volume zone here. And as you can see, it broke down from this this consolidation area last week and start moving down. Although on Friday we got a little bit of a bounce, but I still expect this to continue to move down at least to this low volume zone here, somewhere around this 6781 area. And the other home builder we also talked about in the last week or so is the DR Horton. And as you can see, it is breaking down, and these are some of the potential trade location or trade level that one could look for on a swing short. But we're essentially looking for the possibility of moving down to this low volume zone here, down here at this $60.60 level here, somewhere around that level. Right now it's sitting at this high volume node here, right up here, somewhere around 70.67. So we'll see what it break through this high volume node and work itself down toward this low volume node at the $60.66 area. We also look at this Toll Brother as another home builders, and essentially also broken down. Right now it's coming down to this high volume node here at 44.84. So we'll keep an eye on for it to break through this high volume node and work itself down to this 40.74 area, this low volume node. And finally, Pulte Home GHM. Remember I disclosed that I did have a short position, and I have closed that short position already. As you can see, it came down to this this zone here, this low volume zone. So that was a nice move from up here and broken to these high volume node. And right now it's coming down to this low volume zone. So we'll see, will it get a rejection and push us back up a little bit, or will it just cut right through to this low volume zone and work itself down to this 34.99 or 35 level at this high volume node here. Now let's take a look at the relative strength of some of the sector to see where the market participants are putting their money. And first we're going to take a look at the GDX. That's the gold miner ETF. And as you can see, the this ETF has just recently broken out of this declining trend line and also broke above these resistance level. So definitely the gold miner ETF is outperforming the S&P 500. Now, if you haven't seen the video that I put out on how to generate this relative strength chart on the Thinkorswim platform, and go check out the video. I have put the link in the description below. And also looking at the GDXJ, which is the junior gold miner, as you can see, it also has broken out of this trend line here and also broke this resistance. So right now it's sitting above this resistance level here. So essentially it's like a support level now. So definitely, again, similarly to the gold miner ETF, this junior gold miner ETF also been outperforming the S&P 500. And here looking at the energy, the XLE, the energy ETF, you can see that it also been outperforming the S&P 500. and broke this trend line, the descending trend line here, and also broke this level here. It's basically the resistance level, and right now it's sitting above that. And the natural gas ETF, the UNG, is also has broken out, and it is outperforming the S&P 500. Now let's look at some of the sector that has been underperformed the S&P 500. Is the XLF, the financial ETF. You can see that it's been coming down, right? So it's relatively, it is underperforming the S&P 500. And the other sector that been relatively underperformed the S&P 500 is the technology ETF, the XLK. You can see that it's been declining here. And right now, basically, watch this. If it breaks below this low, we could be looking at this XLF to come down at this level here in a relative performance to the S&P 500. And here, looking at the semiconductor ETF, we can see that it has also been underperforming the S&P 500. See this right here, making a series of lower high, and just recently broke this level here. So we are keeping an eye on these lower level to see what it break below this level. So definitely the semiconductor sector is quite weak. And finally, the XHB, the home builder ETF. We just went and looked at some of the home builder stock, and you can see the weakness here in this ETF. See, it's broken down, and it is performing very poorly relative to the S&P 500. In summary, the S&P 500, along with other major market indexes, are setting up a bearish price pattern for a possible downward move. There are some market-moving economic reports coming out next week, the CPI and the PPI. These numbers will move the market. And don't be surprised to see a 9 handle on the CPI. The internals and the market sentiment are showing some fear and level of caution from the market participants. So be patient and be careful. The market is setting up for a potential downside move, and it could be heading back to test the recent low. Be sure to click the thumbs up if you find this video to be informative. Thank you for watching, and stay safe.